What's going on, everybody? Peter Zane coming at you via Markiplier and Benzinga. I want to give you your weekly options outlook. Essentially, this week we are all caught up with the government shutdown. Lots of temporary furloughs of jobs out there. Markets actually interpreted relatively well and took a move to the upside, and literally on no volume. And every move up towards 169 has been sold off. Bounced off 168, back and forth, back and forth. The usual chop. Um, they've got a few more days to come out with the decision, and honestly, what I'm expecting overall, as you can see in the VIX, actually, overall at the money volatility is higher, even though we're trading higher on the SPY, and that means two things. Okay, one that I wouldn't say that new people are positioning into new stocks or anything like that, or getting into new positions. I would say that a lot of institutions are unloading a little bit. Um, and what's happening is that they're letting the market go a little bit, and they're letting traders essentially take the markets wherever the momentum takes it. So that leaves a lot of us traders with these gap ups, gap downs, and kind of back and forth nonsense. And you want to be careful of the way it trades here. This is a volatility markets, a volatility market makers market. So essentially, they're just going to sell options against you at all times. For instance, against Google, the price line. Price line surprisingly made highs, and these things could rocket, one more time if the news is perceived relatively well from DC. If not, obviously look for more chop. I wouldn't say there's necessarily a lot more downside, but they're going to gyrate the markets a good bit because we're actually getting into earnings season along with the debt ceiling worries. So it's all coming together at one time. And honestly, when there's this much going on, I would honestly just sell for decay on Fridays or play stock. If you're playing any options during the week, I would stay very close into the money, maybe one strike out, just to be safe. Because again, even though you have more volatile markets to continue holding up your overall option values, the likelihood of a real move is not really there because again, we're expanded range shopping, and it's just it's a pretty big mess out there. So again, guys, I would be selling decay on Fridays. I would also be paying attention to the headwinds coming along. They're going to drive a lot of things that are going to happen. I would watch your price lines. Tesla looks like it's topping off a little bit. I would probably sell calls against it for a little while until it's calmed down a little bit, fade a little bit more. Google, nice mover. Apple, watch this one. She made a surprise move too. Friday I think she caught some news, and it's very rare that Apple will actually catch news and move. She usually does not do that. So again, that just gives you kind of an idea of how light the markets are volume-wise. And on top of that, watch your Facebook crossing through the 50 into the 51 area. It's been problematic, and if she breaks through, could be a nice mover, especially if markets pick up. And if not, look for a sell-off off that 51 line. Again, watch your decay. We are not in a trending market yet. We're still just expanded range up and down nonsense. And in that case, volatility is higher. I would be selling premium on Fridays, Thursdays into Fridays. And if you wanted to play during the week, play stock, play at the money options, or play one strike out of the money to take advantage sort of the scalping opportunity, and not necessarily the swing opportunity. All right, guys, you were forewarned. Be sure you stay on top of all the economic news coming. Okay, you have government shutdown, government opening, Syria nonsense, Fukushima. You've got earnings, and you've got debt ceiling right all around this month. Okay, so again, be careful of all the news. I would definitely be careful swinging in any positions. All right, guys, this is Peter Zhang over and out.